All right, so ready to really break down the market moves today.
Absolutely.
We've got this market deep dive report, and got a lot of good stuff in it.
Yeah, it's pretty fascinating how the market's kind of balancing on a bit of a tightrope today.
Oh, really?
Yeah, you've got these positive economic signs, but at the same time, you've got this potential government shutdown.
Uh-huh.
And then on top of that, you've got global trade tensions simmering in the background.
Yeah, it's a lot to unpack.
It really is.
So let's just jump right into it, I guess.
Okay, sounds good.
So the U.S. stock market closed higher today.
Yeah.
All the major indices were in the green, but, wasn't just some random upswing.
Right, the core PCE index,
Okay.
which is the Fed's preferred way to measure inflation,
Yeah.
that showed a slowdown in price increases.
Okay.
And this is a pretty big deal because it kind of reinforces the Fed's hints about possible rate cuts in 2025.
Okay. So that's good news, right?
Yeah, it's definitely good news.
But it doesn't sound like they're going to just slam on the brakes with these rate cuts.
No, exactly. I mean, while the data is encouraging, the Fed's likely to remain cautious and data dependent.
So they're going to wait and see, basically.
Exactly.
Yeah. Okay.
All right.
Speaking of waiting and seeing and uncertainty, let's talk about this government shutdown thing.
Okay.
The House just voted against the spending bill backed by former President Trump,
Right.
which means a shutdown this weekend is probably going to happen.
Yeah, it's looking likely.
But the market didn't seem to freak out about that.
Yeah, that is interesting.
What's the deal with that?
Well, it seems like investors are just more focused on that positive inflation news.
Okay.
So they might be viewing this shutdown as just a temporary political hiccup
Yeah, okay.
rather than like a long-term economic threat.
Just a blip on the radar.
Potentially, yeah.
Okay.
But, of course, things could change depending on, how long the shutdown lasts and how it impacts various sectors. So we'll have to wait and see.
So you're saying uncertainty is the name of the game?
Yeah, pretty much always.
Okay,
Yeah.
fair enough. All right, so we've got this backdrop of uncertainty.
Yeah.
How did different sectors do today?
Well, tech made a bit of a comeback, especially semiconductors, which is interesting because, there's all this global worry about chip manufacturing.
Yeah?
But clearly, investors are seeing an opportunity there despite the challenges.
Okay, so what else was looking good?
Let's see.
Yeah.
Consumer discretionary did pretty well,
Okay.
likely fueled by all that holiday shopping optimism.
Oh, yeah, it's almost Christmas.
Right. And then financials responded positively to the stable interest rate outlook. Energy saw some gains as oil prices stabilized.
So some good news all around.
Yeah, for the most part. But, healthcare recovered some ground after being in the political crossfire lately.
Yeah.
And energy's gains were pretty modest, reflecting, those ongoing concerns about long-term oil demand.
So not all sunshine and roses.
No, not quite.
All right, so let's get to the exciting part.
Okay.
Let's talk stocks.
Right.
Some big wins today, some not so great news, and everything in between.
Yeah, definitely a mixed bag.
So what stood out to you?
Well, NVIDIA was definitely a star performer today,
Okay.
up on the strength of their AI chips.
So AI chips are hot.
It seems that way, yeah.
That's good to know.
Um,
What about the companies that didn't fare so well?
well, Tesla had a tough day.
Okay.
They were down 6%
Oh.
after announcing a massive recall
Oh, really?
of 700,000 vehicles in the U.S.
Wow.
due to problems with their tire pressure monitoring system.
That's a lot of cars.
It is,
Yeah, 700,000 vehicle recall is definitely not good news.
No, it's not a good look.
Were there any other big surprises today?
Well, Carnival Cruises actually had a surprisingly strong day.
Really?
Yeah, they soared 8%
Wow.
on the back of solid earnings and a really optimistic outlook for 2025.
Huh. So people are ready to set sail again.
Apparently so.
That's pretty amazing.
It is, yeah.
But it wasn't smooth sailing for everyone in the healthcare space, right?
Right. Novo Nordisk took a pretty significant hit,
Okay.
dropping 20%,
Oh, wow.
after a key obesity treatment trial yielded disappointing results.
Oh, so not good.
No, not at all.
Yeah, that's a reminder that those pharmaceuticals,
Right.
they're high stakes.
Very high stakes.
Yeah. All right, so we've seen the highs and lows of individual stocks.
Uh-huh.
But let's switch gears and talk about bonds.
Okay.
You mentioned earlier that bond yields eased today.
Yeah,
Can you break that down for us?
sure. Bond yields basically reflect the return an investor can expect to get from holding a bond.
Okay.
So when yields ease, it generally signals increasing confidence from investors.
Okay.
They're willing to accept lower returns because they're more optimistic about the economy.
So easing bond yields basically mean investors are feeling pretty good about the Fed's ability to handle inflation.
That's a reasonable interpretation. Yeah.
Okay, that makes sense.
Yeah.
Now let's wrap things up with a quick look at the commodities market.
Okay.
Oil, gold, Bitcoin. What's the story there?
Okay, so oil prices found some stability today,
Okay,
settling around $70.50 a barrel.
okay.
It's kind of tug of war right now, you
Yeah.
know, between concerns about slowing global demand and potential supply disruptions
Okay,
because of all the geopolitical tensions.
so oil is stuck in the middle of all that.
Yeah, pretty much.
What about gold?
Gold surged today,
Okay.
which is often seen as a safe haven play.
Yeah.
When investors get nervous about the economy,
Mhm.
they tend to flock to gold as a store of value.
But didn't we just say that easing bond yields mean investors are feeling confident?
Yeah,
So doesn't that contradict the idea that they're looking for safety in gold?
it's an interesting point. Perhaps the rise in gold prices is less about fear and more about strategy.
Okay.
You know, with the Fed potentially easing up on interest rates, gold becomes a more attractive option compared to bonds.
Interesting.
Yeah, because bonds may offer lower yields in the future.
So gold is more of a calculated move than a panicked one.
Potentially, yeah.
Okay, that's fascinating.
Um,
What about Bitcoin? Did it join the gold rush?
Bitcoin actually took a dip today.
Oh, really?
Yeah, falling below $95,000.
Wow.
There are a few factors at play here.
Okay.
Some outflows from Bitcoin ETFs
Uh-huh.
and the ongoing concerns about regulation.
So a bit of a reality check for the crypto world.
Yeah, I think that's a fair assessment.
Okay. All right. So we've covered a lot of ground today.
We have.
Broad market trends,
Mhm.
sector performances, ups and downs of individual stocks.
Yeah, it's a lot to take in.
The market's a complex beast.
It really is.
But as we head into the final weeks of 2024
Uh-huh.
and look ahead to 2025, there's a lot to keep an eye on.
Definitely. A lot of moving parts.
Speaking of moving parts and things to keep an eye on,
Uh-huh.
we haven't talked about the new administration's policies yet.
Right.
How might those impact the market?
Well, it's definitely something investors are paying close attention to.
Yeah.
I mean, the new administration's approach to things like trade,
Yeah.
taxes regulation, and spending,
Yeah.
that could have a big impact on a lot of sectors.
So it's not just about watching, economic indicators, earnings reports.
Yeah.
We got to consider the politics too.
Yeah, the intersection of politics and economics is always interesting.
Yeah.
It can create both opportunities and challenges.
Like how?
Well, for example, the new administration is really focused on renewable energy.
Right.
So that could be great for those companies, but it might create some headwinds for traditional energy companies.
Right. So it's all about understanding those ripple effects.
Exactly.
Sounds like it's going to be an interesting ride
It will be, for sure.
as these policies take shape.
Yeah.
Any parting thoughts for our listeners out there?
Well, I would say stay informed.
Okay.
Stay curious.
Uh-huh.
And don't be afraid to adapt your investment strategy.
Yeah.
The market rewards those who are agile
Okay. Good advice.
and can anticipate change.
It's not just about riding the waves. Got to know when to adjust your sails.
You got it.
Awesome. Well, this has been another fantastic deep dive. I always learn so much from you.
Well, thanks for having me. I always enjoy these conversations.
Me too. And as we wrap up today's episode, I'm left with this question for all of you listening out there.
Oh, I like it. Let's hear it.
Okay, so we've talked about inflation, potential rate cuts, the government shutdown drama, global trade tensions with these possible tariffs. Given all of that, what sectors or companies do you think will be the most affected in 2025?
Ooh, that's a great question.
Right. It's something to really think about over the weekend and do some research on.
Absolutely.
And speaking of next week, just a quick reminder that we're switching gears from daily market reports to a weekly recap.
Right. It'll be a nice change of pace.
So join us next weekend as we break down the biggest market movers of the week. Until then, happy investing, everybody.
Happy investing.